Before we can do anything with job costing, we need to define what job costing is. It's easily said because lots of people talk about job costing, but they struggle with what it actually means. So we just move through here and have a look and say, look, what does job costing mean here? For lots of people, it means different things. Some things people mean like servicing your car, charging out your time if you're a professional, building a house, R&D project, tenement management, manufacturing an item, even building something like Northwest Shelf or building a mine. All of those are projects and can be treated as job costing. So it gets quite difficult when you start talking job costing. And the first thing that most people have to do is work out what are we trying to do. And this become more interesting once you start looking at the module itself. So we just do a simple thing and say, well, let's have a definition of what job costing is. And it's a more formal definition. Job costing is the allocation of all time, material and expenses to an individual project, job or event or item. It allows an organisation to collect and report revenue and expenditure associated with these jobs against budgets, forecasts for the better management of these jobs and projects. All sounds quite formal, but it is really how do you collect information on something that you're trying to manage, and there's lots of different costs that come into it. So is costing still relevant? Most of it absolutely relevant for all people. A lot of people think being busy doesn't mean it's being efficient, right? And even though you aren't making money, it tends to hide problems. So getting better control of jobs is good for business, both on and up and down side of any economy. We just have a look at some of the key information that needs to be captured on the job, right? And then it's a matter of how you report it. The thing that you've really got to think about is everyone who runs a job has a different set of requirements or KPI on what they want to get reported and how they want to report it. If you only just stop and think about it and go, if I'm fixing a car, I only really want to know how much I should be charging my client. If I'm building an R&D project, I'm looking at how much am I allowed to spend and how much is my grant. Am I going to go over my grant money? If I'm building a mine site, I have a major cost and I have lots of subcontractors and people doing things, and I'm trying to manage that there's no cost overrun. But it really does vary to where you are and what you're trying to do. If we have a look at the essential of what's in creating jobs, really the key thing most people know is, do I make money on a job? Is the selling price less than a total cost profit? And if I didn't make money, what went wrong? If I did make money, what went right? Then you go, how much have we got to spend on a job? So it's really, really simple type tracking things through. We just have a look at the structure that sort of goes into a job. You can get a bit of a feel for this, is that when you're doing a job costing, pretty much everything gets fed into job costing. And it sounds easy to say everything, but if you look at purchasing, quoting, estimating, you need timesheets, time clock for people. You need to raise invoices. You need to use stock. It all feeds into the general ledger. You realise you're buying stuff from overseas. You're doing bill of materials, so it's mostly the central module of all the client modules. Because everything can go through it, even more so than the general ledger. The general ledger is a summary of the information, but pretty much every other module gets information from or gives information to the job costing. Even all the sales analysis gets analysed for a job. Point of sale can allocate things to a job as well. If we just have a look at some of the things that do go in a bit more detail. I'll just run through some of them. So the first one, creditors invoicing. You can do direct purchases of materials to a job. You can buy subcontracting to a job. When you do time sheets, so you can manually enter time sheets into Triumph. You can use the time clock module to have people clocking on, clocking off, or you can use a web timesheet function to have people clocking on, clocking off to a job. A payroll has to be fed into the job, and information on what's been fed into the job fed back to the payroll. Overhead can vary to things that you want to add extra consumable costs, or commonly I use for doing things like equipment or dry hire. So I want to charge your own internal equipment against the job, so I know how much recovery I'm getting on using my own equipment. Direct purchases is letting me go and buy in direct things using my credit card or cash. I bought something for a job. You've got material requisitions, so if you've got your inventory, what do you want to bring into the job? Very simple stuff is you can say, look, I just want to go to the stock room and drag it across. Then you've got either the bill of materials, so I want to bring all of the components across. If I'm using a point of sale world, it'd be easier to go there and actually let the trade guys at the trade counter allocate and give me the job, so they need to be able to charge on the point of sale to the job. If you're using quoting or another way of doing bill of material, you want to actually know this is what I've quoted and all the materials that I'm going to use on this job, and we want the system to actually know before we even build it, so it will pull it out of stock immediately. We can then do normal purchasing. So purchasing can either be created from doing a job quote, so based on a quote it knows it's got to order stuff, or you can raise an ad hoc purchase order for a job. You can do web requisitions for a job, or you can use the purchase requisitions or advanced purchasing module to say I want to buy stuff and have people approve it. Other things that happen, debtors invoicing. How do we bill this job? So we do need to bill a job out, and it needs to go out by an invoicing method. Is it a cost plus job? Is it a job that's got progress claims? Then if we are doing a job, are we tracking the work in progress? Lots of people do want to know what the work in progress, others want to just know what I need to build. Some jobs you don't even want to have work in progress turned on because it's just a cost capturing device, there is no asset. And then you've got the ability to quote or do estimating on jobs. All of these components and details we will talk about in a lot more depth as you go through the module, but you start thinking there are a lot of components that can feed into a job. If we just have a look at a job briefly and think about, well, what costs go into a job? Essentially there is three major components that go to a job. It's your labour, your materials and your overhead. And that's really what it is. But if you have a look at labour, you can have internal staff, which really requires timesheets and payroll information to be captured, or you have external contractors, so you can have someone else's time charged to a job. You can have materials, so you're using your own stock for a job, or buying it in from an external person as a purchase. Same situation on overheads. You can have direct overheads, so overheads that are consumed on that job and you want to bill them, or you can have indirect overheads, so you're trying to charge maintenance or electricity and things for running the admin department against each job. So it all comes back to calculations, but knowing that they're the key components. We then have a look at some of the reports that can get produced from a job. I'm not going to go through and talk about all of these. When we go and look at the details, you get a feel for it. But just running through some of those, you can see things like, is it above or below budget? How does it compare to my estimates and my quotes? Did I make markups? Was my productivity and efficiency good? How much time did I need to do? What rates? What sort of income and advance and things like that are there? So there's quite a significant amount of reporting. You tend to find that because people have different expectations, this is all driving this, and there's a lot of reporting capability. I'll then have a look at some of the key reporting functions that I would tend to look at. Main ones are things like work in progress. Is it a work in progress? Talk further about as you're doing it, but in essence, it is really an asset. When you're building a job, it's an asset, and you say this is something that have a value, and the value builds as we put more costs into it, and then when we sell it, that's then realising that value. You can do quoting and estimating on a job. You can compare what you budgeted to what it actually cost you. What did you quote versus what you charge. things like staff utilisation, and you need to look at scheduling for purchasing and stock, getting purchase orders on board. Okay, let's have a brief look at work in progress, because work in progress is maybe the key function that's different in clients and a lot of systems. Work in progress is an asset. It reflects the costs incurred on jobs that haven't yet been invoiced. So if you imagine that you're working on a job and you've done 10 hours work, that 10 hours work has a price on it, so therefore you have got a value in that asset. The way client treats it the same as stock. So when you're actually invoicing a whole job out, it says, yes, you've got to invoice it out for a value, but there has to be a cost. So if you were thinking about selling an item, you know you've got a sell price, but you also know there's always a cost. And if you think about a job in that concept, means that there is always a work in progress component that has to be invoiced out at the time you're raising an invoice to the customer. The challenging thing is job system without work in progress can cause people's accounting figures to get a bit out of control. Mainly because of the fact that as you incur expenses against that job, those expenses come in and means the P&L for the month is actually going down, and then when you bill it potentially next month, you get all the revenue in one month. So what work in progress is all about is evening those ups and downs. If I quickly talk about MYOB and QuickBooks, being sort of competitors that most people come along from, there are a couple of examples where you don't actually have work in progress involved in the system. It is only really a general ledger reporting type environment, and you have what I call a profit and loss bounce. And that bounce is caused by, I've incurred all the expenses this month, but I invoice it next month. So that means my profit and loss is a loss this month, but next month I have a super profit. And you start to then not really then have things about how do I get stock for a job and what does the person cost. Because in MYOB and QuickBooks you tend to be just putting through the employees' costs, not their full overhead costs, and that will come more clear as we talk about the individual modules. So as a summary, I'll come back to here. The key thing to think about with the costing module is one of the key modules, and that all the other modules tend to be built around it. So I'll leave you to think about that, and then you can go into the details. Job costing, really quite challenging how to explain this to anyone, because with job costing, the biggest problem is it's too flexible. There's many ways you can set up a job costing system, and just depends on the functions and the features that you turn on in this standard setup. What I'll do is just take you through some basic setups, and as we go through the rest of the training, I will then at times turn things on, turn things off, so that you can see the different ways and talk about examples of where we can do this. So if I'm just going to job costing, transaction maintenance, job maintenance to start with, fairly simple sort of things. I can choose a job. Standard systems can be just by job number, or you can see you can do an alphanumeric job if you want to just choose the first job. Very simple. What's the job number? An alternate code giving you an alternate method of searching for a job. A short description for what a job is. Who's the job for, so you can actually tie it to a customer. If you didn't want to tie it to a customer, you can leave that blank. If you do leave it blank, you are then forced to put in the customer's name. A couple of other things while we are looking at these things here tells me I've got notes and I can copy one job to another. We've also got concepts of an internal job. An internal job is a job that we're doing for ourselves, and we don't want to track any work in progress, so any expenses that we incur on that are then immediately written off. And if it comes through from the job quoting module, it will actually tell me this flag here. And if you're in multi-division, you can have, it'll actually also tell me what division that job's in. So simple sort of thing, who's the customer's name, the ability to have an extended description for the job, giving more detail of what's on it, the expected start date and the expected completion date. Just use it, not so much user defined, but you can put whatever dates you like in there. There is no controls, it's more of a reporting function for later on. You have a concept of having job groups. So job groups can be any types of jobs. So in this case here, in this example, we have all jobs or exhibition jobs or home removal. So normally you tend to find that the jobs that you set up in this area are where you define different parts of the business. So in our business as consultants, we have the hardware department, we have the software department and the personnel department. So they would all be different job groups in their own right. Custody can be defined as being who's managing the job, so a person, so you can actually have a person running the job, or you can have an area, so you can group that job into different areas, like country, metro. The custody and area are both functions that can be set up, and the names can be changed. So if I just minimize here and go to system maintenance, system setup, and look at the job costing setup, these can actually be called different things: sales area, sales, custody area. So very much in the same vein as where you've looked at debtors, that you can set up sales reps, sales areas for that. So come back to here. I can set up a job posting, so when I'm posting a job, I can either post it to the general ledger based on information set at a whole of job level or at a cost center level. So this one here that's set at a job level means that it will always use this posting table to post the information through to the general ledger based on. If I zoom in on this cost center for a minute and just pull that up, what this means is it will actually then use the work in progress account and the expense account from here. Later on you'll appreciate with expenses that you can also have different categories of expenses for different types of cost centers, which can then all be overridden by this expense account, so you can nominate this expense. The only one it's going to do. To charge by job or cost center, same situation as setting up is when you're nominating charge out rates and charging out margins, is it defined as a job level or a cost center level? Same situation when you're doing budgeting. Are you budgeting for whole job or by the cost center of the job? Contract value. So what is the contract value? So your charge out value and a customer's order number. This information is actually updated if you do a job quote, or it feeds through automatically from the quote. The next tab, we then get to have the job address. So you've got a job address for where you're doing the work, but you've also had the debtor's address and contact details. Take that one away from that and just save that. You'll see that even though I haven't got a debtor there now, I have no debtor's address because I don't need to know who it is. It does force me to still put in a person's name. I'll just put that back to where it was. And then if we carry on through to contact, that job, before I do, this reminder that you actually do have here the ability to click on this and go to Google Maps, and you've got the ability here to click on these, and if you've got a VoIP phone, you automatically put it through. Contacts, I'm not going to take this in detail, but this is the same sort of contact information that you see in debtors and creditors. What will happen is if you set up a job and put in a debtor, it will automatically bring through the debtors, all the debtors' contact information and feed straight onto the job as well. margin structure, where we looked at it a moment ago. Here with the charge by job or cost centre, that means that if it's set to cost centre, this is shaded out, but if it's set to job, it means that you can then come in here and set the different margins. So, as we talked about in summary, a job has 5 major components. It has your labour, subcontracting time being other people's labour, materials being materials related to a job coming out of your stock, direct purchases, which is costs coming from creditors or overhead. So if we looked at something like labour to start with, what is the charge out rate we want to do? So you'll nominate here that we could either go a level or a markup. Got level means that we have up to 6 different charge out rates. So the charge out rates actually are the same as you have with inventory. We've got 6 different prices. So you can nominate the price list you're going to charge out, or you can nominate that you're going to have a cost rate plus a markup on labour. For subcontracting, always asking what markup you're having on your subcontractors. For inventory, what price list are you using? What markup are you putting on your costs? Direct purchases, same thing as having a markup. Overheads, if you're charging overheads, you can set up to 6 price lists on your overheads, or you can charge out a markup on those. If I just come back here and I change this to being a charge or a cost centre and save that, and pull that job up again for a minute, you'll see then that the margin structure is shaded out, and what we'll find is then each different cost centre has its own margin structure that you can set. So you can then set a different margin structure for each part of the job. Back through this for a minute, we'll just talk about it. You can set up parent-children jobs. So a parent job is a head job, and then you can have the children job being related to it. When you set a parent up, you can then nominate how is the sub-jobs reported under it, separately, combined, or chained. Add that to none. You can tick documents on a job. So where you've got drawings, things, you can just scan those in. Same as if you've done it for debtors, creditors, and inventory. If you then have a look at cost centre, a job can have any number of cost centres that you like. So cost centre is set up with code. You can have an alternate code on there. You can have a description of what it is. You can group cost centres into different departments. The same situation here, doesn't need to be called department. If I went into my system maintenance, system setup, control again, job control, I can nominate that. It can have its own name as well. So what that means is you can then group and report multiple cost centres into one department and overhead. You can nominate based on your postings whether you're going to post at a cost centre level and expense at a cost centre level. And as we talked about with margins. So that sort of gives you a brief summary of setting up a job. We will talk more about the inquiries later. Job maintenance. But when we're doing job maintenance, if you're setting up a job from first go, you normally start at the bottom and start working up. So I'll just do that and look at a few of the areas. So area maintenance, fairly simple, and you'll see this is repetitive in all the jobs. I come in, I can click in here, and I can go OS or overseas. So I can set up a new department because it's going to be overseas jobs. Save that, do it simple, and then let me collect that. Custody maintenance, same sort of thing. I can go FB and make that. So blogs. Oh, I can save that nice and easy. So nothing too hard in there. We just look at a couple of the others that are very similar. When you do a department maintenance, very similar. I can then set up a department. being or is it R&D? Nice and simple. And we can set up job group maintenance, so we can group them into disposal. So they're the simple ones. I now talk about some of the couple of more complicated ones. First one is your posting table maintenance. We just come into here and let's have a look at this. So when we set up a general ledger posting, it's very similar to setting up an expense code or an inventory one. The difference being that instead of an opening stock, you have opening WIP, closing WIP, the WIP asset. What's normally would be called purchases, but it's called a default expense. Sales is called revenue, and then you have discounts. Something to just bear in mind is you can have a default expense. If you leave that blank, or you sorry, not leave it blank, but if you actually come into the expense category, you can actually set up and have labour, subcontract, materials, purchases, overhead. If this is left blank, the system will default back to this one and use this one. If this is filled in, it will use this as the first preference, so you can actually break down different labour costs. And then if you looked on the actual job itself, the cost centre and the job can have a default expense, which is be given priority over any of the ones in this setting area. Looking at some of the other areas we need to set up here. Default cost centres. The system allows you to set up a cost centre on the fly for a job. So if I just go into a job maintenance for a moment, pull up a job and go, yes, I want to go here and put a new cost centre. And when I'm setting this up, I can either click on the three dots and it will bring up what I call the default cost centre. So I can actually pull through one that's already been pre-created, or if there wasn't one that was created, I could put in one new and fill in the details myself as I go. So letting me do both and saving that as it is. We go and have a look at what's actually saved on a default cost centre. So when you set up a cost centre, as we had one there, 2500, or 2700 this time, and go plumbing, so I can give it a code, an alternate code. I can nominate the department that it's grouped into. So the department is sharing this into an area, so I can look at it and go, yes, plumbing is always going to be within the energy requisitions department. I can nominate the standard posting table that goes with that department, and I can set up default margins that go with that cost centre. So all this is doing is meaning when you're setting up a job, it just means it's easy to pull up one that exists. One of the tricks that's quite common when setting up cost centres and to save confusion is a lot of times when I set up the cost centre, you set up the same account as the general ledger code. So because you're trying on a cost centre to have lots and lots of jobs with the same things, it's sometimes easy to make the cost centre exactly the same as the GL code, because then people don't get as confused. But you can have anything you like in a cost centre. Just save that. We'll have a look at a couple of other ones while we're here. So we now start having a look at things like employee maintenance. So when I set up an employee, I can set up a person. So ask you for a position, so he can be plumber. By default, based on what's in our general ledger control sheet, it brings through the labour recovered account. We'll talk more about that entry as we go through, but the effect is that when you put in the timesheet, it will debit the labour expense based on what you set in the GL posting table, and it will credit this labour recovery account. You can nominate a default activity, what's the sort of normal time that this person will be doing. So instead of having to type in, you can bring it to automatically. If you're linking it up with an external payroll system, you can put in the external payroll number, and you can set up to 6 different cost rates or charge rates depending on what you set. One of the key components here is what is the cost. For many people, this causes a lot of confusion to what cost of an employee. Commonly, people coming off my office, people tend to say the cost is what we pay the person. But when you actually stop and think about that, and you go, well, hang on, I'm also paying their superannuation on top of that. I'm paying their payroll tax. I'm paying their workers' comp, and I'm then administrating people. So normally the actual cost of an employee is far higher than what you're physically paying them. So we would normally work out a standard cost for a person. Rule of thumb I normally work on is whatever they're being paid, you double that, and that gives you a rough figure for what their real cost is. But there is a bit more science to it if you want to sit down and work through that. So you normally then put in the person it's going to cost you $50, and you want to charge them out for $100. Why do you have a second cost and second charge out and potentially other ones? It might be that we're saying this person's working overtime, so we know the cost is going to be higher and the charge out is going to be higher, or they're doing different functions, so they're at a higher rate doing a different job. So that one. You mentioned activities there a moment ago, so if I just go and have a look at activity. An activity is a type of time that someone does when they're doing their working. So it could be, put in annual leave, so when I'm setting this up, it could be so they then have time coming through. You can set up a multiplier. What a multiplier lets you do is effectively nominating a person having time and a half or double time. And we'll talk more about that when we do time sheets. Is the time they're doing chargeable? So from a productivity point of view, is it productive time or non-productive time? Charging by activity. Normally, as we saw when we set up employee, we can have a charge rate, but we can click in here and we can set up that we have different charge rates by activity. So instead of actually taking the charge out rate based on the person, you're taking the charge out rate based on what they're doing. And you can also link this up to external payroll. So as people are taking different types of time, what's it going to go into the pay system at? Classically, I've set up annual leave here, so you'd be setting that up something like leave, so you know it's going to go to leave. But if I looked at something else where someone was doing normal general admin, we'd want to go that to maybe the work. So that's the payroll system, so it is all work. While I am in here looking at this employee, I can also do a figure inquiry, and it will actually give me what's the person charged out for the period, what have they actually cost for the year, and how many units they've done for both period, year and future. While I think of that as well, something missed when I was looking at employee maintenance. In employee maintenance, we can also set up budgets for an employee. So you can actually have a budgeted amount of time or cost, and also the number of units, so you can track how many hours or how many units they need to do. And you can do auto adjustments on that, just the same as if you're doing it through a general ledger budget. So you can change things based on on-screen budgets, and you can do percentage changes, all up changes, etc. And you can change it both dollars, units, or both. Come out of budgets, I can then do a figure inquiry on employee to say how much should they charge for the period, the year, the future, actual, what have they budgeted, what's the variance, how many units have they done for the period, year, what have we budgeted, what's the variance there. Okay, last one but not least one in this little area is the overhead maintenance. You just go and have a look at overhead maintenance. I can set up overhead maintenance, so it might be that we're going to charge our own truck out to a job. And same situation that if I am using my own truck, what's the GL recovery account? So the journal would be to debit the job for expense, and you want to put a credit account through. You have an ability to actually link a charge out with another job. If I can have that as an optional on and off. When I normally do that, you would have a situation that with a truck, I'm charging the truck against one job, but I may want to actually link this back to the actual job, the truck itself, because where we then incur expenses on a job or on a truck. So we might be buying tyres, things, and petrol for a truck, and we have a job for that, and we then incur how much that job truck's really costing us, and then we can nominate and compare what we've actually charged against internal jobs versus what it actually costs to run the job. We'll talk a bit more about that when we're running some reports later on. I will leave that one blank, but I can then put in my normal expected charge, cost of running. So this is a standardised cost of running a truck and what it's going to be charged out at. So I might have different charge rates, different cost rates for doing certain things. I can have up to 6 different cost rates. Once I've actually put a cost in there, you see I can then put budgets the same as if I'm putting for an employee. I can do auto adjustments against them, and I can then look up the figures and see what have I charged, what's it actually costing, what have I budgeted, and what sort of variance I've got on the job. And the last thing in the maintenance area is I can actually print out a job sheet on a job. So I can actually come in here and list out the notes that are coming with the job, any transactions that need to come and print that up as a sheet. So just having a look at a job again, and we're going to now look at some of the inquiries that we can do on a job. So if I immediately go into the job and just have a look at some of the functions that we can do down the bottom here. First simple one is I can actually print up a job sheet. And this gives me a job sheet for that job that I'm working on, that I can have a look at and see what's happening and print that out. This is all done in Crystal, so easily user definable. We can look up the budget on a job, both by amount and by units, and you can adjust the budgets to different dollars, units both. Based on the settings in the system, in this case here, budget can either be done on a monthly basis, so where you're linking it to your general ledger, the budget works absolutely in line with the general ledger period, or you can turn off the general ledger period type reporting and just have the budget for the whole job. If I click through into cost centers for a moment, when we actually do this, because we click the budgets here on this cost center, it is only giving me the budgeting for that cost center rather than the whole job. So I can actually then look at budgets to set up an installation. So my budgets in that case can be absolutely down to each cost center with the same level of detail, or on the whole job. I can look up purchase orders. So what are all the purchase orders that are outstanding on this job that haven't yet been fulfilled? So I can have the outstanding ones, or I can have a list of all the jobs even if they have been filled, and it will give me details, like scan across there of what's committed, what's purchase orders, what's been delivered, and with all orders of what's outstanding. It's giving me the ability to track it. Same thing if I click on the cost centers and hit purchase orders here, it gives me what's actually outstanding on the purchase orders for the setup and installation area. And you can do that to any of the sub areas. That's operations again, and now have a look at figures. So this is giving me the figures for the whole business or the whole job. So this is quite a powerful screen to look at. So give you a concept of period to date figures, which is this month, financial year, year to date and future. compared to a lot of the job costing systems, they tend to work in two ways. They either give you a to-date picture, so it gives it the whole job, or a lot of systems will only give it to you to this financial year. So when you do an end of the year in your general ledger, you lose the figures and they reset. Client will give you both. So it will give you a few numbers here. Key one, charge is based on the markups that you've calculated. It gives you the theoretical chargeable figure. So how much you should have charged out, not what you've invoiced, but what you're proposing to charge out based on your nominated markups. Because we can all do a job and we can say we're going to charge it out of rate, but if it doesn't actually work properly and you've got to do extra costs, then you don't actually always get your chargeable. That comes back to what was invoiced. The actual cost of what's been incurred on a job, you then do get a list of what was invoiced, and invoice can be different to charged again, but this is actually what's been raised as physical invoices. You've also got what's been budgeted for the period. You've got work in progress, so you can have work in progress for the year, and so this is what the asset value is. Committed is a list of your purchase orders. You'll see there's a gap here which I haven't turned on, and maybe I just go and turn that on. I'll put income advance on. And do that figure inquiry again now. You'll see it's now added in income and advance figures, so I can actually track how much income and advance I've got on a job. If I look at the details under the transaction dollars, it will look at this job and say for my labour, subcontract, materials, purchase overhead, how much of those different functions I had for the month, the year, the job, and into next period, and totals. If I click on units, it gives me the same information but by the quantity. So really, for a lot of people, it's the number of hours they've charged under labour, and number of hours I've had of some contract is quite key for reporting. If I then click on this transaction button here, or this one, the system will give me a list of all of the transactions, and I might go a little bit smaller for a minute. We can then get a list of all the different types of transactions. So you'll see, just looking at this type, is all the different sub-transactions, whether it's labour, subcontracting, overheads, what's the internal reference number or the transaction number of the purchase order or timesheet, the event number, the date of the transaction, what cost centre it went to, in this case, which employee and what expense they were wearing. If we're bringing through on a creditor, it'll give us a creditor's code. If we're putting a stock item in, it'll give us a stock code. Any applicable reference code. What's the actual amount? What's the charge amount? How much of the work in progress has been applied? This is really saying we still have this amount of work in progress or an asset in the ledger. What GP we made on each transaction. Any cross-referencing codes. The quantity that we received in multipliers. Actual price, charge price, description, and then we come back to the beginning. And I can do that for the history of jobs, current jobs, or future transactions. If I pick a transaction, we can look at a transaction and have a look at what's been applied. I had one that's had a certain amount of, it's not there. If it had been there, I could have looked and see how much work in progress has been written off. If I do it under history, I'll be able to see it. No, I don't have one there. Okay. But normally if I've written one off, I can also pick a transaction and do an event inquiry. And the event inquiry make it a little bit bigger. Give you what journals were done effectively. So a normal thing goes against my work in progress and making adjustments. It'll also then give me details of who did it, when they did it, and the debits and credits and all the adjustments going through. Alright, so closing out of there, that's sort of giving me the front page, but if I go back to my cost centres again and I pick up a cost centre and look at my figures, you'll see it's now just giving me the figures for the administration, so giving me similar information on what's been charged, what's actual. It's not giving me invoice. In this case, this job's not set up to invoice on a cost centre basis, but if I have got it set up to invoice on a cost centre basis, it'll give me that, what my work in progress and what my WIP is. But turn that off. And part of this is by seeing how you can do things with turning things on and off, you get to start seeing a lot of the power that's driven behind it. And if I do cost centres on invoices here, so one of the key things in Stripe is that you can turn things on, turn things off, and you can make the job costing either more complicated or less complicated. So I go to my cost centre now and hit my figures. So now by turning that on, I'll be able to see what's been invoiced on this particular cost centre or what income and advance is on this particular cost centre. So it's just driven by the fact that I optionally can decide whether I want to see invoicing. If I take and while I am looking at those figures, I make another change so you can see this. I'll go back in again and turn off year-to-date display. Pull that job up again and look at the figures, and you'll see now it just has period to date, future, so you don't have your year-to-date position. So depending on whether you want to see what's happening in the financial or you just want to have a look at the job overall, you can see what's happening. So back onto the cost centre, so when I look up that cost centre, same sort of information, work in progress, committed. It'll also only just give me the transaction, so same amount of information, but only for that cost centre that I'm working on. So key component there is to be aware that if I look at operations, it gives me any inquiry information for the whole job. If I go into the cost centre, I can see the details for just that section of the job. So we've sort of been looking at setting up jobs and firing on jobs, but if I just start looking at some of the setup options of the job costing, so you can see some of the power of things. So when we're in here, we start to get components of things we can set up. I'm just going to go through a few of these and we'll sort of skip back and forth. So the first one is under jobs. So I've been talking about job costing, but I may want to actually change this and call it boat costing and call it section. So I've changed that, and if I hit save there, we now have a boat costing module. And look at my maintenance, I have default sections, and if I go into job maintenance, we now have a boat number and sections, and there's all our different views. So I can do, but very quickly by doing a little change like that, it can make the job costing far more appropriate to the user. They can feel like it's actually working for them, not against them. Go back into here again, and you'll see that my boat costing control, I can put that back to job again, just the standard cell. So the default is job and cost center, but you can do the same with your groups, areas, departments. If we have a look at a couple of others, I can turn off group numbers, so same as what I'm doing within debtors. If I don't want to have those in there, I can turn those off. I can turn off department settings. I can turn off labour activities. I can turn off parent children. I can turn off income advance. just talked about. If I just save that for a moment, and we now have a look at a job. I go to maintenance, and none of those sections are here to maintain anymore. And if I go into a job, the setting up of the job is simplified because you don't have that information in there. And you're not having those groupings, etc. I'm going to turn them back on. So get those back on. Oh, let's talk about labour. Let's just talk about that for a minute. So we only have an employee. There's no labour activity. So it's basically broken it down so that the person's timesheets are very simple. And you have no parent-children on the job as well. Requisitions for BOM numbers I'll talk about at a later stage. Allow sales accruals we'll talk about at a later stage. Income and advance we'll have a major discussion on that. You can do periods and you can nominate up to 99 months of history. I won't talk about the work in progress as yet, but you can turn that on and off. Budgets, we talked briefly about that a while ago, so this is where you can turn on budget. And you can either budget it by period or not, so I'll turn that off. You have an ability also to have warnings, so should you exceed your budget, do you want it to give you a warning based on you exceeding your numbers, exceeding your actual amount or your charge amount, or giving you no warnings. You can set up your default next job number, timesheet number, overhead number, administrative adjustment number. Entry options we've talked about things. So when you're actually doing timesheets, we'll talk a bit more about putting time in. You can do it either by units and time in minutes. The more data entry ones. You have an ability to store or recall timesheets. When we're doing timesheets, we'll talk about those, but it lets you actually have timesheets either update automatically or be posted as batches. Entry default, so when you are setting up a job, what are the standard defaults that you want? So all of the sections and cost centers and default postings can be set up, and you can also set up your standard charge matrix. So what is your normal accepted margin? I'm going to save that and just go back and we'll talk about that. I'll turn the budgets on there and go back into a job. So now if I have a look at mine. Oh, I've turned budgets off completely. I thought I didn't mean to do that. Oh. Maybe I haven't. Maybe it's going and I'll look at that. Alright. Something to keep that on my toes. I'll turn that back on for a second. Obviously something in the demo is causing me a bit of trouble because what I was trying to do is to set up my jobs with budgets again. Which is normally you can actually then set up budgets and you only get to have one budget figure in there. We might revisit that as we go through the training a bit further. Okay. I think that's something back here covering, yes, so all the rest of the things in that cost configuration area we'll cover as we do them. The one you will notice up the top here before we go is that you can actually turn off cost centers completely. I tend to very rarely turn them off because it's easier to leave it turned on and have at least one cost center on a job. because most people start off saying they don't need to break it down, but they seem to quickly change their minds. It's just easier to have it on to begin with. Alright. You just start looking at some job transactions. I'm going to just go in and do a creditor's invoice entry. So key thing here is when you're doing a creditor's invoice entry, it's exactly the same if you go in either via job costing, transaction entry, creditor invoice entry, or go to creditor's transaction invoice entry. You get to exactly the same screen. They've just given us two methodologies getting there, just for ease of setting up for operations. I'm not going to talk about the details of doing a job budget, setting up a creditors code and putting in invoices, and just going to assume that all of these things is covered under the creditors module, but all of that is absolutely the same. Skip through there and come straight to the lines. But the main thing we'll see here is we talked about stock, general ledger, job. Let's have a look at a job line in its own right. The first thing that happens when we pull up a job line is it wants to know what job we're going to. So if we pick our job, and because cost center is turned on, we always have to pick cost center. As we pick cost center, it will then put a description. We can then choose to do a purchase or a service. The difference of this is when we're looking up the job inquiry, the cost for purchase will go under the direct purchases. A service line will go under subcontract. So you can minimise there for a minute and we'll go and have a look at job maintenance. What that's saying. So I looked at figure inquiry and looked under my transactions. It either goes under subcontractor or the purchases based on that criteria you're setting there. Quantity, you put in the quantity that you're buying, what's the cost price, it adds to GST. You'll see it automatically works out what your charge at is based on the markup that's set within that job and cost center. You can override that and put your own markup in if you want to put your own markup in, or put in your own rate. Brings through the tax, puts in the actual amount, and lets you actually have a grand total of charge. And you can do multiple jobs to different jobs and cost centers quite happily. That's pretty much everything process it. All the standard concepts that when you're doing a job invoice, you can still do general ledger lines, you can do stock lines, you can do disbursement and descriptions, and you can interchange between them. So nice and easy to process that. So hit OK now, and if I go and have a look at that job, you should have had purchase come through, which is there, and the arrow across, I can see there's my chart, cost of $100, my charge of $145. It's not applied for WIP, my margin and my details. What I do want to look at here is my event inquiry, so we can actually have a look at the journal effect that's had. I'm making that so we can see. So what you will see, it will actually have done. I did a 2-line journal, but if I looked at that, it will actually have added to the job expense. It will have done it. And yes, move that page across a little bit, move it back. So will it put through debit to that job expense? You'll see it will have done A debit to the work in progress is an asset. A credit to the closing work in progress will adjust by GST and then done the credit sheet in the creditors control account. So the simple entry that you get is debit purchases, credit creditors, debit work in progress, credit closing work in progress. Every time you do a creditor's invoice coming through. And then come back out of here and just look at doing a creditor's credit note. And exactly the same in the opposite way. So not when you put it through, you process it through, fixed cost center, how much, put positive figures through, and that would have the effect of actually reversing the cost through. I'm not going to save it, but I just wanted to cover that so you can see the differences. While we are doing creditors invoices, that's the simple sort of entry. If we look behind that and go into creditors and start looking at purchase ordering, if we look at a purchase order and pull up an order, I'll just create a new one. And go to the lines, you'll see that you can do a job line through here, just simply as the same thing. Putting it to a cost center lets you put in a much bigger description. Test the job cost. It can be a purchase or a service line, same concept. It now gives us a bit more details about supplier catalogue numbers. Put through costs and details when it's delivered. If I'll process that for the moment, and I won't look at the purchase order, but I'm just going to go and have a look at what happened on our job. The actual effect is it does put it through into our committed purchase orders. So if I went and had a look at my, you'll see it coming through in here as being the expense, etc. that we've put through. So flowing through and giving it to us as a work in progress expense. Not a work in as an outstanding committed liability, and then as we move through and we do these goods received, it will actually adjust our job. What I want to also briefly look at when you're looking at a purchase order is not only when you're doing jobs, you also have another line type called a stock job. So what a stock job line purchase order lets you do is order things in your stockpile which you normally hold in stock for a particular job. So I can order some pencil sharpeners in here for this job and this cost center, and order in 100 of those, so it will actually bring them in for that particular job. What is interesting though is that it doesn't actually bring them in as a purchase into the job. It will bring the purchase into stock and then requisition it straight out of stock back into the job. So something we will give you some exercises to have a look at in a bit more detail. So that's giving you a quick summary of how to do a job, creditor's invoice, credit note, and then purchasing. And the key thing to learn and understand there is that the journals of that create is to debit the purchaser's account for the job, credit the creditor's liability, debit the work in progress asset, and credit the closing work in progress account.
Job costing has lots of different types of transaction types, mainly driven by, if we have a look at a normal job for a moment and pull up a job and have a look at a figure inquiry. We have a look at the transaction types. Really, there's 5 different types of transactions. And as we look at this, these types of transactions being labour, subcontract, materials, purchases and overheads really drive where transactions are going to come from. So if you think about that, labour comes from timesheets that are put into the system. It comes from the time clock system coming externally. It comes from other external things like PDA units from the point of sale, potentially coming from payroll. Subcontracting always comes from purchase orders or invoices. Materials coming from your inventory stock requisitions or from your job costs, sorry, point of sale job transactions. Purchases is coming from purchase orders and creditors invoices. Overheads always coming through your overhead entry area. So having those different transactions leads us to look at this, and you can see here as we look at the transactions, the same sort of things, timesheets, creditors, invoices, and flowing through from there. And then you end up with a range of other things with your write-offs and incomes. So what we'll do is we'll work through and have a look at all the different types and see how they flow together. I'll do each of them as a separate video, but that's sort of giving you a little bit of an overview of how the timesheets and the transactions all work together. So we're just going to now have a look at some timesheets into so job costing, transactions, timesheet entry. So first thing we need to do is you need to select the actual employee that you're working for. Something to do if I zoom in on this employee to have a look. A lot of the information on that employee is being used when we do the timesheets. It'll pull through their position, recovery. If they've got an activity, we can set up a default linking it up to the person's payroll, because this data can be fed back into the payroll. The cost and the charge rates will pull through. So if I close out of there for a minute and I look at my inquiry, you'll see, yes, the recovery account where it's going to go into the general ledger and the position happens. I come down here. Reference can be an internal reference. Normally you can put in a summary total. So if I was working 38-hour week and I was putting through my timesheet for the full week, I could put a check total in there. I'll just leave it at 0 and I can then come in. I had a previous timesheet that I'd saved here, but what this lets me do is look at the job, the cost centre, and I can choose the activity. Something to be conscious of is in the setup of job costing. We go into setup job costing for a moment. Is you don't have to actually have labour activities turned on. You don't even have to have cost centres turned on if you like. Other things that you can drive through here is you can set up your time to charge, whether you record it by time or by units. If you go by units, you can actually then set in here that a unit is either 1 hour or 12 5-minute blocks, or in a lot of cases in accountancy practice will be 10 units to an hour. And you can nominate whether you want to be able to override costs for employees or overheads, and you can also set store or recall transact timesheets. So if we minimise there and we look at this timesheet and the effect of this, so jobs are always mandatory, cost centre and activity can be closed off, description's mandatory, the date that I did the work. So when I'm putting in the time, what time did I start to what time did I finish, and you'll see the system then works out, because I've set this up to time that it's 3 hours, or I could override that and say it's 3.5 hours, and you'll see it actually works back to change the time. Depending on my settings here, I can turn the cost off so I can't edit it, and that's where there's a setting in the thing to say whether I sometimes want to change it, never want to change it, or always want to change it. The charge rate comes up. This is based on what was set up in the employee. Something that's also to be conscious on setting up the charge rate is if I go back into my maintenance, under job costing maintenance, I can set an activity to be charged by activity. So in that case, if I was doing this one here, I can set this up to have a different charge rate. Let's go back timesheet. So finish that one, do another job. Pick up my general admin time. Oh, I thought I'd had that one. Let's zoom in there and have a look, make sure we've set that activity. Oh. Come back out of there. So that's what happens when I've actually preset that. I can then get that coming through and pulling up the different charge rates for people. One of the other things to be conscious of is when you're looking at these charge rates, this cost center, I'll zoom to a cost center. As you've set up a cost center and you have your margin structure, this is where you can actually nominate the level or the charge rate that you'll be using either on a job or on a cost center level if you were doing it on a cost center basis. So each cost center can then be set up with its own levels. So there is quite a few ways of actually getting the system to work out your different charges, or you can actually override your charge rate yourself manually. If I hit OK, you'll see it comes up a question here about save, post, cancel. That's with it being able to recall ones. You can set it up so it will just automatically post straight through the job immediately, or you can save it and then post it later. So I will just post this one now, and that's posted that through to the job. So if I went back into a job, you'd see that the transaction has then come through straight in there at the moment, coming through as those transactions that I've just put through. They're just saying what's happening. So it all flows through immediately into the different areas. Alright, that's enough on job costing. Sorry, not job costing on time. So if we're going to do a creditor's invoice in job costing, first thing we need to do is we pick a creditor. As we pick a creditor, we'll put through that with a normal invoice number. All the standard sort of processing you have for the creditor's invoice there. If we then have a look at the normal lines and choose a job line, you can pick your job, pick your cost center, and as you come through here, it'll actually ask you a question about whether it is either purchase or service. If we have a look at this by going and zooming into that job, I hit the right key, but we'll zoom in on that job and have a look and look at the figure inquiry. You'll see under the transactions that there's a area subcontract and purchases. So really when we're processing a service line, it'll go into subcontract. If we're doing a purchase, it'll go into the purchase category and breaks it down into the type of transactions. And as we look at the transaction, you'd actually see it has a purchase or a subcontractor, so you can actually follow it through at a fairly low level. Some of the other things just to be conscious of when you're doing this is the margin structure on cost centers here is driven off what subcontracting is purchases. So if I change this one to 30% and close back there and put this through, and we do a purchase line, it'll actually add the 30% on for me. Pick the same job and the same cost center. And change that to a service line this time. You'll see it actually now has that different margin based on what was set in the system. So that all works very simply. One of the other things you can do is you can then change your markup, and the system will actually calculate backwards the margin based on that, so you have a bit of flexibility on how you can process those through. Closing out of there, we can also do creditors, credit note entry, and this is exactly the same as what you normally do, but it's just doing it in reverse with all the same information. It has the effect of flowing it a negative transaction back into the job. For most people, they tend not to do a lot of entries in here. Most entries actually come through from the creditor's purchase ordering, and either via purchase requisitions and requisition entry, and you can look at that in the requisition entry training. We'll just look at today via the purchase order entry. So if I just do a normal order, raise a new purchase order, choose a creditor, and all the standard information comes up. I then come down into my lines and have my standard job line. When I pull up my standard job line, I pull in my cost center and come through that. What we will see is, because we're now doing it through purchase ordering, we have a far bigger description area to give us information to record details of what this is all about. I get the same option then to do purchase as a service. I can actually fill in what my supplier code is, so if I know their code, and then I get to fill in same sort of information that I was putting onto a purchase order, and details about delivery date, putting that through. The real power actually comes when we start looking at the added line we get, which is not normally in creditor's invoice, a thing called stock job. For a lot of people, when they're doing jobbing, they use their stock control more as a catalogue. So by using your stock as a catalogue, I can actually then flag and say, I want to buy one of these for this job, and it'll then go and buy that item in with the details and descriptions that are coming from the stock item, brings it through, costs it all out for me, process. What's really quite powerful when we do one of these lines, it pulls the transaction through as an immediate stock requisition into stock, but then requisitions it straight out back into the job. So it goes all through the process. So I won't print that out. I can come through and just pick up that purchase order, and you can do your normal receipting, etc., but I'm just going to process it as a purchase order. I'll put an invoice number, and I will then process those two transactions through, completing the purchase order, emailing everything out if I need to. If I then go back to my job, and look at my transactions coming down at the bottom here, you'll see that we've had some purchases come through, some subcontracting come through, purchasing again, subcontracting, but you'll also see for that extra line which we brought in, actually shows the requisition rather than a purchase, because what it's actually done is we went and looked at that stock item. So if we actually go to that stock item for a minute, and we look at its transactions, you'll see it's had a purchase and then it's actually had a transfer out to the job. And if we arrow across, it'll actually give me the details of where it was bought and at what job it went out to. So there's quite a lot of power by driving your purchase orders in a different way there. So that essentially covers off how to do jobs and do standard creditors invoices. Stock requisitions, a couple of different ways to do this. You can do it under inventory transaction stock requisitions, or you can have the same effect by going through job costing, transaction, stock requisition. It is exactly the same screen comes up, it's exactly the same program running, it's just running from two different places. So you'll see it here's JDE, but it's actually using an inventory requisition program. So what this does is the date of the requisition, it'll automatically give it a requisition number. You can requisition to a job at different cost prices, so you can actually bring things at a marked up price, and you can have a grand total, and you can actually cause it to credit the sales in inventory. But if we look at what happens on the job itself, it pulls it in as a stock item. So this stock item is coming in to a job, and to a cost center. You have an internal reference. We're bringing 10 of these across into the job at this cost, and it immediately brings through the markup that's set on the job. What is happening in this case, if we look at that job, put my zoom in and look at my figures, it'll actually be adding this into this materials column. And if we looked at the transactions, you'd see it actually coming as a requisition for goods coming in. Coming back out of there though, process that transaction. A couple of other things that happen when you do this. If I bring in a job and bring in a stock item that is actually a bill of material item, and when I bring that bill of material item in, it has an option set up here to split it. So what actually happens here, instead of bringing the completed item over into the job, it can bring in the components individually into the job for helping to build it. One of the other things to think about is if you are actually doing this and you realise that you've got more in a job than you need to, you can actually put a stock item in, put the job in at the cost centre, and then do a -1, and that will have the effect of taking it out of the job as well. So I'll actually take that completely out of that job. If you actually do it for a BOM item, it has quite a different effect as well. If you put it through as a -10 of those, it has the effect of actually going back and calculating what the drilling in on that job to get its work in progress figure and actually doing a reverse calculation for you on what each item is built at. So I'm not going to process that one, but I will process. I'll delete that last one. I'll process those. So that's bringing through in as a stock requisition. One of the other things that people can do with stock requisitions is go by your point of sale. And if you log into your point of sale area, you have the capability of selling items and then saving them as a job requisition. So bringing them through into your job and your cost center, and producing a stock requisition straight into that job. So that's handy from the point of view that you're now able to use your point of sale as a counter system so people can pull stock from, or it also means people can use their point of sale on their iPad to do issuing with barcode scanning and all those sort of things that are allowed. Coming back into the job and having a look at job costing and having a look at what's actually happened. When we've maintained that job, it's now brought through a whole heap of requisitions, and some of these you'll see as we look at the details are related to the bill of materials and different requisitions that we've been doing. One of the items that isn't used as much is direct purchases. Direct purchases sort of allows you to do a few different things. First thing you should know, if I am doing a direct purchase, I can actually do different types of transactions. I can do a journal, I can treat it as a cash, check, credit card. So most common thing you see here is people are paying things directly with their credit card and want to record it against a job, or they've drawn a check. So if I've just used standard EFTPOS for the minute, I can put through and say what payment number, how much came out of the bank account, and which job was this related to, what cost centre, and essentially recording it very much the same as if I was doing a creditor's invoice. What you will find is, because it's a type of transaction, if I zoom to that job and look at the figures, it will actually be adding into this purchases characteristic, and if we look at the transactions, it would actually be coming through as a purchase transaction. So treating it very much like a creditor's entry. So that's a very simple entry. If I process that one, and then come back and change it to a journal as I do a journal. So you can actually nominate a supplier. It doesn't have to be related to a person, but just more of um, information about invoice numbers, etc., because you're doing it like a normal supplier. But with a journal, you'll see it actually adds one more feature. Instead of asking for the bank account, it asks for the other side of the general ledger journal. So you can actually pick any account in your general ledger to nominate that this has been an adjustment against that. So you can then come to your job and do an essential journal against any job in the system based on the cost. I'll do the markup for you. So it gives you a fair bit of power to do things. Just something to note is normally if you are setting up opening journals for work in progress, this is where you tend to actually use the journals and bring through your opening balances for any work in progress and take up. And that's a fairly simple one, being direct purchases. So setting up overheads. Overheads can be used in a few different ways, and we just zoom in on an overhead to have a look at. When you actually set up an overhead, you do set up to do your recoveries, and you can do some things here with different types of transactions to allow you to bring it through, and you can nominate the different costs and charge rates. So in this case, I can have my truck set up so that when I cost it to the job, it's worth a certain amount, charging out. So it's very much like charging out an employee, and I can do budgets and things like that. If I then process this truck through, what's the truck? I can do it like a timesheet, putting it through against the job, cost center, and it'll automatically bring through the costings for me. So very simple process. One of the powerful components in here is the ability to actually link a cost center or an overhead area with another job. So if we look at the reporting that goes with this, it's very much used in a dry hire type environment, that if I run up a report, and minimize that so I can see this, you'll see that as this job comes through, it says my courier charges, I did $4.75 for the month. I charged theoretically $58. It actually cost me $29. What was my GP? You'll see on the telephone charges it has that information, but it also then links to the PABX job to say this is what was charged and what the real costs on running that job. So you can actually run an asset and track all the individual costs of running that asset. So if it was a truck, it could be the tyres, the fuel, all those things going to it. And then you can see how much was actually charged out to other jobs through the overhead recharging. Other types of overheads, you can set it up to have fixed overheads or admin overheads that are being charged to a job at the setup time. So there's a lot of flexibility of what can be done there. But from a data entry point of view of timesheets, of overheads, it's very much like doing an employee's timesheet. You're just charging an internal cost. Something to bear in mind, lots of people forget to do this because they may have their own truck or ute, or they hire things. If they hire it in, they will put it through creditors, but once they buy one, they forget to do it and don't cost it out very well. So it's something to always remind people about doing. In some of the previous videos, we've sort of gone through the processing of doing individual timesheets, creditors, invoices, stock requisitions, direct purchases, overheads. But we do find that some environments, clients have situations where they actually produce a job card. So if you actually went in, you produced your job sheet, that job sheet is then given to the staff, and the staff then write on there the parts they used, the time they did, anything else that required to go on that job. And in a normal processing situation, that would mean you'd have to go into timesheets, creditors, invoices, stock requisitions as a separate job. There is a combined function called job processing. So if we go to job processing, it's all about saying that I'm working on one particular job. what's the date that I worked on? I can put in a charge amount to check things. I can nominate my different costs and I can have an accrual. But the key thing it lets me now do is say I can do the 5 different transaction types all in the one data entry screen. So if I have that piece of paper that I'm filling things in off, it's very easy for me to now go that this person worked on this part of the job, doing this work, and they worked for 2 hours, and this person did time as well, so they did another hour. We then had some materials come in, so we used some materials out of the storeroom, and it went into this cost center, and we had 20 of those being used. We then had a creditor's invoice come in for some subcontracting time. So maybe we had someone do some painting. And what was their invoice number? How much? What's of interest here? This is actually going to throw it through into our creditors and assume TST, etc. We can do the same thing with purchases. So I pulled something through and invoice number, and it was for steel. Or the last type is I could have used the truck and have that go into the job as well. 3 hours of the truck work. So the ability there is, you can see I've got labour, materials, subcontracting, purchases and overheads, all different types of those transactions, all been processed against that one job. So making that data entry from that time card that people have walked around with and done all the work with, all very well and easy to do. One simple step that processes it through, and then if you went and had a look at your maintenance, you'd see it in that job. So I'm just going to now have a look at some of the transactions which come under the extra transaction options. And if we're just having a look at the first one being work in progress adjustment, essentially what work in progress normally gets written off as you do an invoice. And if you have a look at doing debtors invoicing, you'll see how the work in progress is written off there. But sometimes you do come to the occasion that you want to write off work in progress, either up or down, at a point in time. So if I come into here, pick a job, comes through, I can nominate the date. I can put through an adjustment number, or the system will give me one automatically. I can link to an invoice that relates to this work in progress. So I can actually tie the work in progress I'm writing off or adjusting back to an existing invoice. I'll go OK at the moment. I'll just cancel that, leave it unlinked. So when I then come into this, system will automatically list out for me each of the different cost centres in there, what the actual costs are, the current work in progress, how much has been written off so far, and what adjustment I want to make. So I can come in here and I can write off $3,000 worth of work in progress and hit apply. System will then automatically come in, and depending on the setups I have in the system, will let me then allocate the write-offs just the same as if we were doing a normal debtors or creditors allocation of invoices, because what we're saying is we've got $3,000 to write off. Which individual transactions do I want to apply them? So you'll get the normal sort of selection. I can pick a line, I can auto apply and it will actually balance out the rest of it. Or I can go through and select all credits. So same concept as where we're actually doing transactions. If we come to the bottom of this, if I had other credits, I could pick those up and it would bring them in and then let me auto allocate those out as well. And this will actually, in the system, change my work in progress or applied amount, so you can look at the line and say, yes, that's now been applied. So there, so it's now applying to that job. The way this applies can vary depending on how you set that up. So if we just go to system setup for a moment and have a look at our controls, is when we are setting up work in progress, we have an ability to do it either by job, cost centre, transaction or full. So that one there was by transaction. We just wait to see if this is finished. It's just still running through. It does take a little while to go and apply all of those transactions. Oh, yep. Be patient. What I want to do is then convert this over to and see the difference between doing a job or cost centre application. So if I change this to a WIP allocation by job and hit save there, the system will reconfigure itself. And if I come in now and we look at the extra WIP allocation and do an adjustment, pick a job and you can see I've written off the previous 3,000, and this time when I'm coming through, I want to write off an amount. It doesn't actually ask me how much to write off, it says just write off the whole amount against this job, because there is no requirement to actually define how much was written off. If we then go back in and I'll change that selection, see what happens on the next option, is we'll change it to cost centre. And we'll do another adjustment for this one. So we've now got that amount written off. I can carry on down and I'll write off $500. This case here, it's not actually asking me to look at transactions as in the first one, it's just asking me which working or which do we want to write it off against. So let's do it against that one. You can choose any of them and it will actually allocate against that one and write it all off and continue a running tally of your WIP. So I'm just writing it off there. Okay there, and it writes off the WIP for that transaction. So if we just go and have a look at the last option in our work in progress, is to do it by full. Now we'll notice as we've been going through here, some of the transactions or menu options drop off as well. And you'll see at this stage when it says full, there is no WIP adjustment, because the system works on the basis as I do an invoice, it will automatically always write off the work in progress. So there will be no need to do an adjustment as soon as I do an invoice on there. So if I go back now and I'll just change that back to the normal setting that I would run it on. Normally I run it on transactions, because when I do it as a transaction, I can click to apply future transactions. I want to do things done date based, and I've also got it set up to automatically close off if all my work in progress has been discharged. What this is quite handy for is if I have done work in progress and I haven't actually allocated it by transaction, I can have the system automatically close down and do all that allocation for me. I'll just save out of there again and just reiterate a couple of things that are worth noting. So when I do the adjustment, so I'm doing a full transaction one, I can actually just do this transaction and allocate it at that level, or I can go down into the lines and allocate each line if I wish to. And it works exactly the same as if you're doing it like debtor and creditors payments. So the processes work the same, and you can marry through each different transaction to see that it has been, which transaction's actually been written off. Most of this work in progress written off work is actually done when you're doing a live debtors invoice, but you can run this anytime you like. So we've been talking previously about doing WIP adjustments. The same principle as when you're doing a debtors payment or a creditors payment. You can actually put through a WIP adjustment without allocating it. So you can have put through a lump sum and then go back later and make an allocation. So with this situation here, I can go to an allocation and pick up a transaction. Actually, I'll pick up one that might have something in there, and I can pick up an associated invoice if I like, and then pull in here and then pull up any of the credits. And good either I don't have any credits, but I could have then cut. I've got $2.60. I can then come through and select, apply that, and then auto apply the difference. So you'll see that I'm now balancing this $2.60 back against the transaction I want to allocate. So really just the same as you would do in a debtors. So I close out of there, and if you look in your debtors scenario, it's the same as the transaction balance allocation entry. One other thing that quite commonly happens when we're doing job cost transactions is you may have a situation that after doing an allocation or adjustment, you may want to do a negative work in progress. And to do this is very simple. You can then just do a minus figure, and it'll have the exactly opposite effect as doing a normal adjustment. And as you process that, then it will actually allow you to come straight to the allocation screen. And I can cancel out of that and just process that as an allocation. And come to the allocation myself, pull it up now, and the system will then have that there waiting for me to actually write it back in to adjust for it. So it's actually written it back up, so there isn't actually a negative. But if I had done another one, I would have had that to apply it. So most times when people process transactions in job costing against income, they go through the normal debtors invoicing area and process them as a debtors invoice or a batch invoice and process the transaction. But occasionally you'll get a situation that you haven't yet quite got to finishing the debtors invoice or needing to produce the debtors invoice for the customer, but you wish to record that you've earned income on a job, and really you're accruing the income. So there is an option set up in the job cost control maintenance to actually allow sales accruals. So allow sales accruals even though the debtors invoicing module is on. So what this allows us to do is if we turn this on and come out of here, as always it resets the menus. In my job costing, I can now go to transactions, extra module options, and I can accrue a sales entry. So I can process a job. It will then ask me which cost center I'm doing this for. What sales account accruals account do I want it to go to? So I can normally then have a balance sheet account, accrued liabilities in this case, for an example. What's the sales account? So we'll actually create a journal entry in the system going credit sales, debit the sales accrual account. How much am I invoicing? Description of what it is it GSTable? If I want to process some of it in advance, I can do that. I'll just go with the standard entry at the moment. Processing that through. So the effect of doing that is on the job. We've now seen that the system created a $50,000 invoice. $45x tax essentially. And if we look at the event inquiry that creates, it's coming through and creating the the entry coming through to sales and to potential GST liability and putting it through as a debit account being the accrued liability. So therefore producing revenue on the job for all of your profit and loss reporting on a job, even though you haven't yet produced the invoice to the customer. The norm then is to come back and reverse that entry out of your system. And to reverse that entry is very simple. Pull it up, pull up that same accrual account, and put it through as a processes it back in reverse, and then you can actually go to the debtor's invoice and raise the correct invoice as you would normally do in the process. One of the things that happens to some people when they're doing their job costing is they will actually process things into the wrong place, so users put it against the wrong transaction. The simple way that people normally get instructed on to fix it is to go in, unless that's a timesheet, you go in and pick up the timesheet and process whatever that timesheet is, and you put it through and I'll take it out of there, process it, and then put it into the correct job, so it's in and out. Something that is a little bit easier than that is if you go to transaction options, you can go to the transfer a job, pick up a transaction, and whatever it is, so we can have job 1002 2500, and we can transfer that to PABX 2600. So if I process that through, now go and have a look at job PABX and look at its cost centres, transactions, and just look in the future. Oop. Not in the future, it's just there. It's actually been processed through in reverse, so you can see it's been moved over. If I then went to job 1002, and I think it was job 2200, I can't see it there. I'll just show you a different one that I've done previously. I went to job 1001 and I picked out a transaction and go to the future. You can see if I did this transaction here, which is where I did a reversal, it's reversing this one here. It picked it up and moved it out and put it across onto the new job. So the system automatically will do those reversal entries in the one that you're in and put them into the new area. A nice, simple, easy way to fix it. In job costing, you can actually create a concept of being income in advance. So normally this is set up under job costing, and you need to come in here and actually turn on the income in advance concept. The key concept here is that you want to raise jobs and be able to then invoice a job and say that that income doesn't need to be recognised as income yet until a later point in time. So I've got that turned on. If I come into my normal debtors invoicing, pick a customer and go into the lines, pick a job, and I can come through to here, yes, and invoice $2,000, and the system will then normally ask me what cost centre I want to go to, what sales account, that's all okay. Then it will say income in advance. So if I actually put through $1,500 worth of income in advance, rather than the full 2,000, so we can see the adjustment entries happening. And then it will ask me how much work in progress is related to that. I'm going to leave it at 0 at the moment. If I process that through, I might print that for the moment. just prints like a normal invoice. What I want to do is now have a look at job 1001, and we'll see in here that we now have a certain amount of income in advance, being $1,500, so adding to the 200 was there. If I look at my transactions, there's my income in advance transactions. I'll make that a little wider so you can see it. So it's the $1,500 coming through. If we look at the journal it's creating, so we're actually taking this $1,500 and saying, yes, we invoiced the customer for $2,000 plus GST. It would normally go to sales, so it's gone to $2,000 worth of sales. It's then taken it out of sales and moved it over to, in this case I've got it going to suspense. It was going to a income in advance account in my balance sheet. So it's now sitting there as a credit, which means I can then release that against my income at a future state. Question is, how do I release it? I can do it in a couple of different ways. You could be going through and just raising another separate invoice and releasing it at that stage. So if I just do a normal debtors invoice, so I'm trying to do that. It won't actually let me do that. So you actually can only build it up if I actually invoice it at that stage. I would come through and grow it up. I actually do a credit note. That would actually work a little bit better. And then I can actually bring my credit note through and make my adjustment that way. So it's actually then releasing, but it is putting a credit note on the client's account against their income. Not normally the sort of situation you want to do. Most of the time when you're doing this sort of thing, they've already been invoiced and paid their deposit and the money's in the bank. What you really want to do is now recognise that income in your own account. So there is a function under the extra transaction options called release income in advance. I come into here under job 1001 and look at my associated references, and it will actually bring up the invoices it relates to. And so I say, oh, yes, it relates to that invoice. How much do I want to release? I'll release $1,200. So I can see it's got $1,700 still there. And I'll release that through. So if I went back to my job, now see my income in advance has dropped down to 500, and you'll see it's actually had the $1,200 released. And if we look at the journal, it's taking it out of, in this case, the suspense account and putting it back against the sales account. So you'll see it's actually moving it out of the accrued liability account and putting it and recognising it as revenue. So making it nice and easy to start making your revenue recognition happen in line with things. You also have the capability, should you actually find that you have forgotten to actually put something in advance, you can come back to a job, pull up an invoice that's already there and go, I'll grab that invoice and say I want to actually put a minus 750 and process that through. What that actually has the effect of doing is actually putting that amount back in the income in advance. So that's handy where you forgot to actually do it at invoicing time, but later on you say, I really want to actually take that and recognise that in a later time. Okay, So one of the transactions that confuses people a little bit is when you go to transaction entry, there's nothing in here about actually producing your debtor's invoice for a job. All the debtor's invoicing is actually done under debtor's invoice transaction entry, and either under debtor invoice entry or batch invoice entry. For most clients, we usually use the batch invoice entry when doing job invoices, mainly because of the manual flow that works in most places. Is when they are doing a job invoice, they actually want to look at the invoice after it's been produced and then edit it before they send it out, which works far better if you're using it through the batch invoice entry rather than the dynamic debtor invoice entry. The actual processing of both areas is exactly the same. We just do it through a batch invoice entry, process it through normal debtor, pick up whoever it is, normal warnings and things come up, so nothing changes on there. But when we go to a line and choose to do a job invoice, if I choose a job invoice that relates to a quote, you'll see it automatically happens. It comes up as being invoiced as quoted. So literally it says yes, it's going to be quoted. If I click that on, it would have given me what was going to be quoted. So if I do that for a moment, and we'll just process that and just preview it. Yes. Gives us essentially all of the information that's coming out of the quote and pulls all that across into the invoice and invoices it out for you. So whatever's loaded up on your quote, and because it's a crystal form, you can define whatever else you wanted to go in there. If I close that, and I'll go back into that invoice again, this time I'll unclick that and I'll just put through, say, a total batch invoice of $10,000, and I'm going to do it $11,000 in tax. The system asks me where do I want to post this through, what cost center and what sales account. Something that is in the setup is, as you're doing your entry options, there's a flag here about whether you want to have cost centers on invoices. For some users, they want to be able to break down the income generated per cost center in their structures. Others choose not to. I tend to leave it on for most people because it just means if they want to have their income split up to marry up to their costs, the option is there. It also means that based on your posting tables that are set under a cost center, I'll have a look at those as well for a minute. Your posting tables, when you actually set this up, you can actually nominate the different revenue accounts. So each different cost center can have different revenue accounts coming into your general ledger. So some flexibility comes to where things actually process to. And this will bring through this GL account which you can edit and change as you go. As you process through, we can record things as income advance. One of the key components that comes to is when you're actually processing an invoice is how much work in progress do you wish to allocate to this invoice. For many people this causes a bit of confusion. I think the easiest way to explain it, it's like when you're selling a product. Product always has a known cost. So whatever, if I'm selling a part, everyone knows what it costs me. So at the moment when I'm invoicing this job for $10,000, the work in progress is realistically how much cost relates to that $10,000. There's lots and lots of different ways to do it. People do it on cost to complete, percentage complete, all sorts of things. It really is a matter of choosing whatever figure. For a majority of clients, I tend to say, yes, let's just work out what your standard GP is. So in this case, it's going to have a 20% GP. So I'm always going to write off the related 20% based in here on my WIP adjustment. That's just a rule on this example. So I can process that through. If I process that one and now have a look at that transaction, so it's a very simple invoice, just all the other details are gone. It's now just a progress claim, so very much a progress claim, and the WIP's based on the progress. The third option in invoicing is, if I come back into here, and rather than just putting a lump sum in this time, I'm going to use these 3 dots here. When I click on this, let's pick a job that's got some transactions in it. I pick this one that's got some transactions in it, click on this, it'll then pull up the transactions for me to list out, and I can pick and choose the transactions that I want to invoice. So this way I'm making sure I'm claiming everything that I want to claim. What's very powerful with this is if I pick on this invoice, I can come up here and say I want to change the invoice value to what I want to invoice. I can group them for reporting purposes. I can adjust the WIP. This is bringing through the normal WIP. I can adjust the quantity. I can adjust the description and put in extra information. I can pick another transaction and hit the exclude button, which will exclude it from printing, but will actually adjust it in the numbers. Won't invoice it, but takes the WIP off. And then I process this through, and you'll see it pulls up the number. It'll also automatically bring up the matching WIP. And if I produce that invoice, brings it through so you can see that detail. And this is set up in the formatting of the invoice with Crystal. I can define how I want this to actually process through and what the layout of this wants to be. So giving you a significant amount of power in invoicing and making sure the invoicing works. So you'll find for lots of clients, they actually will do a mixture of the different types of formats. So that covers off on invoicing. When we get into what listings and structures are in jobbing, there's a significant number of different listings, mainly because of the ability to actually configure things. So if we have a look at job listings, there's a job listing which gives us a detailed or a summary listing. Do we want to print rates, print cost centers, open jobs, non-open jobs, and you can have selection criteria of what's there, date it was created, etc. So if I just preview this, gives the ability to see this job details, all the things you've entered in, breaking the cost centers down to where they will go. So that's the optional extra. If we do it with rates in there, you'll actually then see your charge out rates, and if we come down to a job there, there's more cost centers in there, etc. We do a summary one. Job with cost center, so let's take that off. So you're just getting a list of the jobs themselves. So the key thing with when you're looking at listings, there are lots of options and types and details, and you just need to go through and have an experiment with some of those. Budget listings. Do I want to look at budgets in amounts or units? So if I just go amounts and make that a little bit bigger so we can see it. So we can actually see budget for the year and each monthly period is coming through. In this case, it's cost center. It's basically giving each period for the year, running it all the way through for each cost center that goes with it. Or if you've done it and you wanted to have a look at units because you had the number of units, you could do the same thing there. Cost center listing gives it by job. So this cost center is within which jobs. So you can actually see the different jobs it's within. Or if I do it by levels and margins. So then start to say what margins are we making on with each cost center within a job. Overhead listings, fairly much, and I'll include it with charge rates. So you can then actually see your different cost and charge rates for each cost center. Employee listings, and I'll include the charge rates. So you can either have that by name, so you actually then see where they're going with the recovery. So very much just repeating what's actually in their master files. Employee activities. So is it chargeable? Charged by activity. What are the rates that they're going to get? Job groups, so I can get a list of my job groups. List of my departments. Easily see what they are. Default cost center listing. So we'll get that. And this is then giving me each cost center set up as a default area, and not necessarily, you don't have to use them on all jobs, but just giving you defaults. The extras, we can now start to look at the general ledger posting table, and this then gives us our GL posting table, which is not just for jobs but across all cost centres or all parts of the Triumph. Custody, different people in charge of jobs. Areas, what are the areas of a job? You can actually do budgeting for your overheads as well as your jobs themselves. And same thing with employees, you can do employee budgeting by amount or unit, so you can see what the budgets are for each employee. So a substantial amount of listing, but it's all very much recording whatever the static information is, because there's a lot of static information within jobbing. The reporting in job costing is quite extensive, and depending on the sort of transactions you're doing, lots of people have lots of different processes and concepts about what is a valid report and how it should actually be in job costing. If we just went into some of the common ones for a minute, so under job costing work in progress, I have some simple information. I can produce it for the month, the year to date, the future to date and future. So picking whatever I want to do, I can choose the ones that are open, closed, deleted, or all. It's a very large selection criteria. Ones suppress the zero ones. Zero if they've had an invoice. Show me the cost centres, summarise it, and you'll see I've got grouping it by different categories, subgroups, selections. A whole range of things. And the main reason you'll find there's lots of ranges is because everyone has a different idea. Let's just look at what's on this report. And make that a bit larger. It's a fair extensive report. So I've got it by groups. What are the jobs? Then it will give me what's the actual number, what's been theoretically charged, what's been quoted for a job, what's been budgeted, what's been invoiced so far, what's in income in advance, what your committed liability, and what work in progress is on a job. So this one here is by group, by jobs into different categories. I come out of here and just make some changes on that report, do a job by cost centre. I can now see there's a boat, and that boat has sub-jobs. This one here now has a job with individual cost centres, and you'll see the breakdown and the running total of each job and its cost centre. So just by playing with that, there's a significant amount of information can be collected out of it. And we'll go through some of these other reports in some extra reporting, but if you understand for all of these reports, they actually give you significant options and variations. Looking at more reports, one of the ones that's quite commonly used is the cost comparison report. In the cost comparison report, you get the ability to actually now start getting comparisons between different numbers. So we can see what theoretically charged figure is, what the actual cost has been, what we have invoiced so far, what we've quoted, what we've budgeted, what we've got committed, and we can compare between them. We can compare them for the month, the year, to date, future. So if I just do this one period, and we'll do this to date, I can then choose to do it for job number by cost centre. So make that a little bit smaller. So you start to see here, I'm getting a situation that the jobs coming through, each different job and cost centre, I can see the current month situation and then the to-date situation. So it gives you an ability to set up and do various reports where you can do various comparisons. So very much the same selections and groupings and subgroupings you've seen in other reporting. Coming through here on some of these other reports, we've looked at the work in progress separately. Invoice worksheet report. This gives you the ability to see for a range of periods or all periods. So if I just go with all, and I can choose to turn on the descriptions or extended descriptions, and I'll do it by job and cost centre again. So this actually gives us each different job and each different transaction that's gone through, so I can audit trail of the transactions that haven't been processed or haven't been allocated yet, because you can print it out and give it to someone to write on and say, yes, we do want to bill this, so these are the amounts that haven't been billed. And the transaction worksheet is very similar to the previous one, and we looked at the same options there. This one's now giving it to breaking a similar sort of information, but breaking it into the labour requisitions and the type of time you've done with the same sort of concept, so people can come through and say how much was unapplied work in progress and what should be billed. The general concept of both of those two reports is really about letting foremen have a look at the job, work out what they should be billing, then passing that through to the person who's going to do the invoicing. If we look at some of the other reports that are in here, period transaction registers, the ability to get a list of any labour subcontracting, all the different transactions that have happened in there for any range of time by event. And you can see there's a whole criteria of different events. So if I just preview one of these, it's giving me all the labour transactions for this period and what's been charged, who did it and what was the activity, and what margins, etc. we made on every different transaction, and that applies through all of the different types of transactions, so a complete audit trail. The job transaction report is very much more about individual jobs. So if I look at this individual job, it'll give me all of the transactions that went through that job by cost centre, so I can actually track everything in and out with all the detail of exactly what it was. So giving me lots of power there. And if you've got the time clock system on, there's actually an audit register that you can print out as well. We can then do overhead utilisation, so overheads can be done for year-to-date, future, and we can compare them, charge versus actual, budget versus charge, budget versus actual, and that will then give us what's been charged, linking to sub overheads, and giving us what's year-to-date margins, etc. Same thing, sort of report with your employees. So if I go with employees, we can then start to see employees' productivity, how many units they've charged, what was productive time, non-productive time, what was the GPs on each employee. Activity breaks the person's activities down and to see who did which activity. So you can see an activity to say which people were doing it for this reporting. So is it chargeable, non-chargeable, etc. And you've also got the ability to have notes in all the different areas on the report, so very much the same as notes in other sub-modules. So you can come in and say, I want to see a note or only the last note, and it will come through and give you any notes that you've got on jobs to print out. The thing that happens in job costing more than most modules is, as you can see, there's lots and lots of reports, but the report don't actually match up the criteria that the particular engineer or the foreman want to have. So it's very often we start to use crystal reporting to create other reports. One of the more common ones we've got, which I just put under here with job costing P&Ls, is essentially using normal work in progress reporting. I want to have a job by cost centre. And in this case, I'm actually getting a complete revenue account, actual budget variance for the year to date, and what my cost centres are and what my profit is on that job. So the ability to actually use Crystal to produce fairly substantial reporting of this sort of nature makes it very easy for people to get the sort of reporting they want out from job costing, because there's so much power in there. It's just a matter of deciding which ones you want to use. So we'll just have a look at what's in special processing now. If you've been looking at other modules, most of these components will be fairly similar, fairly familiar to you. So the job integrity check, what this does is go through to make sure that your job cost transactions, its JC-Tool file, actually balances up to your JCM MAC file. So it will go through, check the transactions, confirming, and nothing needs to be updated in this example because it's now gone through and made sure all the transactions and work in progress add up. The ability to delete transactions, so you can come through, oops, I need to be in a single user. Module users logged in, so let me just clean up my users. I'm going to be a little rude here by cleaning these up. And come back into job costing, special processing, and we can now come through and delete job costing details. And it's the same as a deletion for all the different modules, but just ticking off for costing. I'm not going to run that at the moment. We can change job codes, so allowing us to change a job code from one job code, so exactly the same as we've got with all of the other things. I can add a job in, give it a new name, and it'll go and change the history. Something that is a little different in some modules, you also can change the cost centre code. And you'll add this in, you can say for this job set, I want to change the new cost centre to something else. And it is driven by the job itself, and it will go back and change the whole history. And then we've got our normal end of year processing for job costing, which lets you chum through and say, yes, it's end of year and processing it. So that really covers your special processing. It's a fairly, like I said, it's very familiar to other modules. So just having a look at the system set up for job costing control, there's quite a deal of options we can have in here. Some of them I'll sort of cover in other components as well, but I'll just go through and briefly talk about. The first one is cost groupings. The ability to have group number 1, group number 2, really for reporting and grouping jobs and areas that you can turn that on, and it controls it only is reported at a job level. Dissection groupings, so you can actually compartmentalise and report cost centres. Labour activities, the ability to turn activities on and off when you're doing timesheets. The ability to say I want to have parents and sub jobs, letting you get reporting of each one together. The requisitioning of BOM parts is so that when you're actually doing a job, you can bring all the components of one bill of material over onto a job in one transaction. The ability to do sales accruals, so if you're making sales or want to record sales in your general ledger without having done the debtor's invoice, you can process those and make accruals. You can track income in advance, which is the income in advance liability, or you can track the deposits that go with a job. The ability to rename a job, this is quite powerful. So I can say this is something like plant and area. So if I just save that for a moment, it's extremely powerful for users to get the hang of things. So I've changed that, and you'll now see it's called plant costing. And if we go into this area here, default areas, which is the cost centres, and now job's got not so much cost centres, but it's got areas, so you can go in and edit it. So one of the areas I do change quite a lot is changing that, because it just makes it easier for people to get an idea of where they're. I'll change it back. So how many history months do you want to track? Do we record work in progress on a job? For many people, you do want to track work in progress. For other people that want to just track the costs. So if you're used to using something like MyOb or something like that, MyOb doesn't actually let you record the work in progress. So if you took that off in a Triumph sense, it would let you run a job just the same as you do in a MyOb world. But when you do actually turn work in progress off, how do you actually want to track the work in progress? Do you track it based on the actual costs, which is normally what happens in an engineering type practice, or if you're in a professional practice, you tend to track it by your charge out rate? And then what is your allocation? So normally I tend to set it up as a work in progress with transactions and auto closing it, so it commits everything and applying in the future. If I do put it into charge, the system will then ask you, well, where do you want to reflect the profit that's generated by doing a job or invoicing at charge rate? So you can either put it to the normal profit account or include it in your work in progress figure. We can have budgets on jobs, and we can budget by period. So a job budget will allow you to have a whole budget for the whole of the job, or you can say, I will only have it on for the period. So this way I can say I've got 12 periods per year, and I can then split my budget out into periods. I can also have the system giving me warnings should I exceed budgets based on my charge or actual figures, or give no warnings. The ability to set up documentation and have standard numbers for different pieces of the job. The ability to have year-to-date display. If I just turn that off for a minute, because this is quite powerful. Come back out of there again. And pull this up into a figure inquiry. The system is just showing me period to date and to date. So it really is, what's this month and what's the life of the job, versus a having situation. If I turn year to date back on, and the figures, I can now see what's gone through for the month, the financial year, and the life of the job. So difference being there, if you're using things like MyOb and QuickBooks and similar products, they're very good at keeping either the monthly figures and the year-to-date financial figures, but once you go past the end of the financial year, they then zero them out and you've got to then start again. So being able to track a job over multiple years is a very powerful benefit. Coming back in, have a look at the other entry options. We've talked about the ability to have cost centres on invoices, but this just gives a person who's actually invoicing the ability to break down their revenue to reflect their revenue against their expenses they've allocated under the sections. When you're putting in time, do you want to break them down into minutes, or do you want to break them down into 5-minute units, 10-minute units, 15-minute units? And how big is the unit? when putting employees in, you can actually have the ability for the person doing the data entry to adjust the employee costs or adjust the overhead costs, and ability, if you are doing timesheets, to actually have them imported in, so you can enter your timesheets in and then you can edit them at a later stage before processing them. Entry defaults is just setting up, as you create a new job, what are the standard defaults that you want on a setup of a job, just to make it easier for processing. And then in the matrix defaults is how do we charge things out. So as we are charging things out for labour, we can set it up so that it works either on price levels, so you can have up to 6 different price levels for a person, or you can say the person is always going to be on a markup rate. For something like subcontracting and for direct purchases coming from our creditors, it's always going to be on a markup basis. Using materials from our stock, which we can have up to 6 different price levels driven off what the inventory price levels are, and you can choose whichever inventory price level you want to use, or you can set it up to take on a markup. And with overheads, same thing, you can have up to 6 different price levels or choose a markup on there. So that's sort of just giving you an idea of some of the options. The key thing to think about there is getting them to all work together, and at times it's a matter of which ones do you have on, off to process it. It gives you a lot of power of creating different environments. I'll come out of it. So maybe the hardest thing to do in job costing is to actually think about the configuration, given the options are available. So what I thought I'd do is maybe just take you through a couple of different alternative methods of setting things up, doing some simple example. So let's start with the first one. Is let's assume we are a mining company and we need to do tenement management. So first thing I would do to do that, come under job cost control, change my name to tenement. I'd mostly change I could leave my section name as cost centre, or I might type to area. One of my groupings here, it could be area of interest, which is actually the so let's change that to area, region. So just giving me some things. So with the setups, normally when I'm doing something like a tenement, do I need to record work in progress? The question is driven more by, do we capitalise the tenement first or do we expense it first? For most people, they tend to actually expense it before they actually do it, so we can turn that off and so there's no work in progress. Process this through. What I'd do then, I've now got my tenement costing set up, setting up my tenement. I'd then give it a tenement number. Giving it whatever it is. No need to be giving it data, just giving it a name of the tenement. I'll call it blue patch. I can then group it into the different types of tenements that I've got. The area that's relevant to it, the region it is, it's the Pilbara, the whatever it is. From a posting point of view, all the rest of the information is there. I can then normally break my cost centre down and say, I want this to actually be tied to my chart of accounts. So in my chart of accounts, I normally have an area which is going to have all of the different expense codes. So I could have a GL code, whatever it is, link that to my GL code and call it geology, setting it all up. And what you normally would do is, I skip that, I'd go break it down by cost centre and budget by cost centre as well, so that when I am setting up my cost centres, I can then link my GL code, my code here, to my GL code. So they're a one-to-one, and then I'd break it down to all of my different expense codes within that geological area. That gives me the ability to have reporting on that job of what's the actual cost been for the month, the year, life, and then depending on the client, we could then use this department as well for the reporting of their level 5 type reports, just grouping them all together. Okay, so let's just move on to another similar sort of example. Let's talk about something else that doesn't have work in progress. Could be a client who's doing R&D or something like they're managing barges to do job, and the management of the barges or the trucks that they're using is they just want to control the costs that are on there. So in that case I would go to here and just go, if I went barge maintenance, or I could go trucks, and regions and areas the same. I don't want to record work in progress because I'm not actually recording it. In this case I'm now doing my truck costing. When I set my truck maintenance up, I can then put in my truck number, and then I would normally come through and break it down so it's coming through by cost centre, budgeting it by cost centre, and then each of these cost centres would be the brakes, fuel and all the different expenses, and then tying them back into my general ledger on a one-to-one basis. So it doesn't matter whether that's trucks, barges, tenements, they all work in a fairly similar way. If I close out of that one, and we'll carry on giving a couple more examples. Another one that I've seen is something like an architect's practice, and what they do is quite different. We then come down to, let's call it practice costing, and we do want to record WIP in that case, and we want to actually bring it by their charge rate, and I'll auto close it because I want to balance it out. I still want to track it by transaction because I want to know that I'm bringing things through, and I will apply in the future, and I'll put it to a WIP journal. So key change that happens here is, yes, I get a change in my descriptions of things, but when I actually bring through and I pull up my job, it doesn't matter what job it is, client XYZ, and I can put it to, I'll just go with whatever cost center at the moment. So when I save that, if I then look at my figures, what I'll actually have here is my work in progress figure is actually driven by my charge figure, not my actual figure, and it will actually do a journal entry to reflect that through the system, giving me the ability to see what's going through and marking it up as I go through. Alright, one more example is maybe doing more of a job maintenance type environment. So I'm just a quick, let's go. Maintenance, if I can spell. And in a maintenance sort of area, I'm normally going to be going actual costs by transactions. And this is what you normally see when you look at the standard sort of try and set up. So as I'm doing this, I'm then breaking my maintenance down, putting in a maintenance number being a job number, and if I look at my figures, you're actually seeing my actual cost and what my theoretical markups are, and you'll see my work in progress is actually being tracked by its cost. The key component is with maintenance is all about when I'm doing my debtors invoicing. If I pull up a job, it's when I actually come to here, it lets me break that down and charge it out by what I'm going to invoice. You will note that if I had been doing it by professional, that to invoice figure would have been charge figure as well. and the WIP would have been matching it up, but in this case it's going to charge it, so I pick and choose what I want to build. Hopefully that's just giving you a quick idea of a few different ways of setting up work in progress.
So what we've included here is a couple of links to different websites where you can actually get a whole heap of useful documents that may or may not relate to the training course you've just been doing, but we've gradually been accumulating different notes and shortcuts that can come in handy. So feel free to go and have a look.
So job costing has a submodule called job quoting. It doesn't look like there's a lot in to do this when you see there's only a couple of menu options, but if we actually go into job quote entry, there's a significant amount of power in here. If we have a look at this to start with, we can either have a general quote, which is a template quote, a normal quote, or a job order. If I just put in a normal quote, pull up a transaction, and I can have a look at this, you'll notice I can copy a job. So if I copy that job, it immediately gives me a new job number. I can change the date of this quote, who's it for, if there's a purchase order number, when's the quote going to expire, the ability to group it into different jobs, custodies, what's the description of the job. If I want to tie it up with a document, I can do that. I can put in a full-blown description, customer that it's involved with, what's the job address that I'm putting in, filling all the job address information in, who's the contact on the job, and this can come through from the customer's file. So if there's a customer's file, we can pick it up from there. Email for the job, phone, contacts, any delivery details. Comes through, we can predefine the different levels and markups that we want to have on different, whether it's labour, subcontracting, materials, direct purchases or overheads, or we can actually have different markups driven by what's coming through on our normal cost centre setups. There's also an option here to have what they call a pre-quoted job, and the key component with this is a normal job quote. You don't actually start work on it until you've actually won the job. But in some jobs it may be required that you actually have to start the job before you can actually quote on it. So you may need to strip down the motor to work out what's wrong. So for a lot of people, they want to start that costing from the beginning, and whether they're going to go ahead with the job, they still will get paid for stripping down and cleaning up. So on this one, I'm just going to take that as, leave it as a non-pre-quoted job, and then come into my lines. So in this case, I've got different cost centres and jobs where I've copied it through. If I start a new cost centre, and say it's for fuel, what I can now do is start to define what to do with the fuel part of this job. What do I need to do? I can choose a certain employee and say that this employee needs to do a certain amount of driving, and I can put in description of what that is and how many hours I think he needs to do this. A system will come up and bring through his cost and charge. Something that's on these timesheets, you can say if it was going to be after hours, and put in double time, and it will calculate his double time rates, total costs, price. A print code. A print code is used when doing your quote print to summarise certain functions or special instructions that you want to have on the quote. I can come through here and go, I don't know which an employee is, but I can pick up that there's going to be someone doing the contract work for an hour and it's going to cost $100, and we're going to charge it out for, it's going to cost me $80 and charge it out for $100. Entry right. One of the things that commonly we do here is where people are going to have many employees at the same. If we looked at an employee, you'll see on an employee we have position handlers. So commonly if we want to have standard type of handlers and things, we set up a person called TA, trades assistant, caps up the right way. And put in whatever his cost is. Save that. So that means if I want to actually then have a generic person being a trade assistant so I can get all my costing coming through, I can then put that through and it'll bring through all my standard costing for trade assistants, grouping them all up together. I can then do a subcontracting line for nominating that I want this person to be the subcontractor on there. If they have a code that they give us, and it can be painting. Going to be one of them at $1,000, and I have my markups. A couple of things here, we'll notice that purchase if required. So what this will do is actually automatically produce a purchase requisition in my creditor system, and I can put in the lead time from ordering. Materials or subcontractors, I can actually put in a blank subcontractor if I don't know who it is and still do the same sort of transaction, and I can fill that subcontractor detail in later. Materials, I can pick a material item that I want to buy and how many do I need for this job, what's the cost, and what am I going to charge it out at. Question is purchase if required, and what this is saying is if I have enough of these on hand, right, I don't need to buy them. So in this case I do have enough on hand, so I wouldn't need to buy them. If I change this until I had 100, the system would then say yes, you need to buy 50 of them. You have another option as you set this up to nominate who the preferred supplier is and lead time, but you can also then put in a required quantity. So if I always wanted to get in that 100, because I don't want to use stock I've already got on hand, it's easy just to get a completed box. I could override that and put that in as such. Purchases, just about identical to doing a subcontractor, but breaking it down into the purchase type characteristic, so we can put it through, put in description of steel again. And I didn't know the price, but I can put a cost in there on that one. I can put through an overhead line. So what is that going to be? Cost all that through. And I have the ability to put in description lines of other things that are going to go on the job. So what this lets me do is actually create a situation that I can see up here. The cost of this centre is this. The overall cost of the job is that. If I look at the totals page, it's now bringing through a charge, what it theoretically should be charging out, what it's costing me based on what I've suggested in my markups. I can then change any of these variables and it will then go and recalculate what the margins are, etc. Or I can say I want to make a 40% margin. Recalculates and comes up with a number. One of the things that commonly happens if you're playing with this sort of stuff, you might find that the people know your charge out rates, and so you don't want to actually change those, so you can lock those when you're actually doing this change of the numbers, or you can leave them unlocked and it gives you a total of units. If I hit OK there, and we'll just have a look at the customer's quote for a moment. So this gives me a quote. And if I look at this quote, depending on how I define this, because it is in Crystal in this case, I've broken it down to give me complete detail of each section, so I can charge it out to people and they can see the full-blown detail. So it's a matter, that's where the print code lets you actually summarise that to put it into different formats. Some of the other things that you can do when you're doing a quote, you can come back into the lines and pull up a quote and reprice it, or reprice just a cost centre, so that will go back and look at the predefined costs and charge out because staff have changed or stock items have changed. You can come in and you can change a supplier from an old creditor to a new creditor. So why would you do that? Well, if you actually hit OK and send out requests for quotes to people, So I could have sent out requests to quotes to numerous people to do this job, or to the supplier that I nominated to do this job, get the quotes in, and then I can go, yes, I want to actually change that and get someone else to do the job, or change it to the new code. So that just means as I'm coming through here, I can change that supplier all the way through. Or I can also do a worksheet which gives me instructions that I can print out to people about what's actually happening on that job, or the items that need to be picked out from the job. So assuming there that that's really setting up a job, and I might just complete that there, and we'll come back and look at converting from a quote to a job in a moment. So we've now got a quote and we send it out to the client. The client then said, yep, go ahead. So normally we can come into that quote, take that quote, and now come up here and convert it to a job order. One of the things that is while we're doing this is you can take a general quote and convert it to a job order, or a general quote to an order. So it's the same effect. So if I put through a job order, what will happen now is automatically create the job comes up, and we can flag some of the other criteria that needs to go. Is it an internal job? Start completion date. So we've got how do we want to post things in the job, either by job or cost center? What's the normal posting table? Is there a default cost center? How do we want to budget? Is it a parent-child job? And we can set all this information up, and it will then flow through and bring this detail in. So if I OK that, process it, we'll now see that it's on my job orders, and we'll go, if we go and have a look at that job, come into file maintenance and have a look at it now. What we'll have actually seen on this job is all that detail that we had about the debtor, what was the job for, all the posting information has now been defined, the contract value, the purchase order number, the address of the job, any contacts that relate to that job have come through, the margin structure that we had set up. If we'd set up as a parent-child, it would have come through. Any documents we had on it would have come through, and the cost centers that we've actually quoted on have come through. What will have also happened here, if I have a look at the figures, it's also brought through my budgets for each cost center. Hasn't done anything else in there at this stage. But if I go into my creditors now and go purchase ordering, purchase requisitions, and process requisition lines, and pick that job that I was just doing, I can now process that, and it would say here are all the different items that I need to be purchasing for this job. So it's saying they're the items we need, and I can then process these transactions. And if we look at our purchase orders, we'll now have a series of unapproved purchase orders for that job. And you'll notice as we do this, the job number and the number comes through. So if we convert that to an order, so I have that one. Oh, I'll put it to an order rather than a general order. And have a look at that. So now that's the job number that's coming through for that person. And in effect, if we go back into the job now, is look at my figures. I've now got my committed purchase orders coming through. So I've committed, instead of looking at that one, I need to look at my purchase orders. So it's now coming through as purchase orders. So I can see that happening. Other things that have happened while I was doing that, if I go to inventory, before I go to inventory, I better look at what jobs, what details was on that job. So if I pull up that order, and let's have a look at so 8690. So I ordered 1,000 of those, and I didn't requisition them. So if I go and have a look at that item now and look at its figures, you'll see that there's on job 3,000, and one of them is reserved for that job. So what it's automatically done is go into the job and reserve stock items for that job. And I'll come out of the job now. So at that stage there, we can now start doing purchasing and processing like a normal job that we would do. So depending on how you've set up your job quote, so if I look at job quote setup for a minute, oh, not job costing, under job quoting, there's a few options as we set this up. We have job numbering for quotes. We can default things. We can do automatic requisitions. What's our quote number? We can set up some entry defaults here, which we'll see in a minute. What name? We can change the name of the file from quoting to estimating to whatever we like to call it. We can either adjust totals by the margin or by the markup, and how long do we hold quotes. So this entry default gives us the ability to default the type of line that we're going to do, and to say the lines that we're going to requisition, and whether we want these requisitions to happen automatically. So we'll look a little bit later at how this works, and whether we want to have pre-quoted jobs on there. The main things that most people like to do is have the job numbering and quoting all the same. So if I've set up a job, I can do requisitions, and a requisition normally is a situation that if I come into here, I want to pick up the job number, the cost center that I'm doing the requisition for, and I can then nominate the date that I'm doing the requisition, pricing, and what it will do then is bring through the different types of transactions that we can automatically requisition. In the actual setup of a job or a job quote, you have the ability to nominate something as automatically requisitioned, or you can decide the type of lines that can be requisitioned, whether you want to do all lines or just some particular lines. What this actually means is that in this case I'm able to set it up so that as this transaction is done, it will automatically pull these lines out of stock for me. Why would you do this is sometimes your staff members and the guys in the warehouse may not be as good at recording things as you expect them to be, and it's easier to run a job and know all the components just need to be withdrawn straight from stock immediately. And by withdrawing them straight from stock, then you're at least keeping the stock relatively good, because you know they're not going to consume it the way they should do it. But if I'm looking at this, it then brings through and says, yes, I'm going to require 1,000 of them. And what it will actually do is, in this case, the BOM will split it. I won't. But if I process this through, it will actually then take it out of my stock requisitions and deal with it correctly. So processing that through. And it just makes it quite simple that you can actually then do your job quoting can become a very large bill of materials type process, because as you create a job and you automatically requisition it, those components will already be used, or the list of the items that you're going to need to be used will be listed out for you to fill in and say, this is what I actually used or didn't use. Job quoting doesn't have a lot of reporting with it, so most of the reporting that comes with job quoting is essentially in the actual job quote itself. So when we come through here and you hit OK, these are the three standard reports where you can get it. Other people will then create some other job reports and things that they can do if they want to get extra information out. But one of the only other areas where job quoting comes in is we go to debtors invoicing and we go to create an invoice, whether it's a batch or a normal debtors invoice, and I put an invoice number in. Doesn't matter who it is, but if I go with this person, put in lines, put up a job, pull in that quote that we've been working on, you'll notice immediately it says invoiced as quoted. So what this means, it'll actually bring through whatever you've quoted as the standard invoice. So if I hit OK, hit preview, it will bring through the standard details that you had on your original quote, or whatever you decide that you want to have your standard invoice format, but it will always have the right amount. The other good thing though is if you chose that you didn't want to actually have that as quoted, you can change that and you can come back in here and you can edit and change and do all those normal job invoicing type formats that go with standard jobbing. So the time clock system is a subsection of the time sheeting. So if you're normally running time sheeting within Triumph, you may have a situation where you want to have staff clocking on and clocking off remotely, or clocking on so they're working like more of a Bundy clock type environment. Literally what this is you put it on a PC and you can come to the PC, click in here, and you can do this with barcode scanners, but I can pull up a person, pull up the job, and it will bring up my jobs for me. Pick up what cost centers are within a job, I can select that. Pick up the type of activity and put in whatever I'm doing. And literally then you can hit the F1 key to clock on and walk away. So then the next person can come up and they can clock onto their job. They can clock on and walk away. One thing that should be noted when you are doing this is if you have made a mistake, you have a minute to actually clock on, clock off again, and that will actually erase what you've done. So from a person who's got big fingers or clunky fingers, it lets them do that and have some chance to change things before they make a mistake. If I've then got to go to a new job, and I'm going to that new job and I want to change it, all I have to do is come along, put in the new job that I've worked on. Once I put in the new job, it'll actually then immediately clock onto that next section. So hopefully I've had a minute here before this person, so immediately you'll see it has had this person come on here, and it's clocking on, telling me how long I've been working. I can then change jobs, change cost centers, change activities, and clock on. What that will immediately do is clock it off to that previous section, and allowing you to actually clock on, clock off as many times as you like through the day. So if I have a look at this person now, we can see that they've done this work, they've clocked off, and it just continues to record each time as they're going through the day where they're up to. End of the day, it's then up to each employee to come along and clock off. If they don't clock off because they forget to, or they skip their lunch break or something like that, there is an admin section which lets you actually go and fix that up. An administrator or the foreman can deal with that. But that's essentially the clock on, clock off screen. So I'll just clock him off there. So initially we did a time clock entry through the standard time clock entry. If we just have a look at what actually happens when you do a time clock entry within Triumph, you will see that if I go and have a look at a job and look at the transactions for that job and look at here, we'll see that those times come through and you'll see each in particular time coming through and tracking it all the way through so you can see it happening. So it actually happens on a dynamic basis. There is also reporting under the user options, and it goes under the thing called the time clock audit register. And if we pull this register up and have a look at it, and make it a little bit bigger so we can actually see it, you'll actually see that it brings through the job, the cost center, the transaction number you've done, when you've done the transaction, who was doing it, their activity, and whatever details have been printed in transaction ID. So if we actually have a look across here, it gives us transaction number or any event number it creates. So just giving you a full audit trail of everything that's happened. And if we look at that report, we can get the full audit, things that have been posted or unposted. So common question here is what's posted and unposted. If I essentially just briefly talk about it, it's anything that's posted is a thing that's already gone to the job costing, unposted are things that are held over. So a common process is when you're doing normal timesheets is you can actually say I don't want to post them by setting up under system maintenance, job control, entry option, store and record timesheets. So that would let you post and unpost them. But to do them on a timesheet or a time clock, it's slightly different. So if we have a look at that, there is actually a requirement to set the time clock entry up to be in a batch mode. To do this, it's actually done in the property of the icon. So you need to actually come in and say, well, which company am I working for here? And I need to run this as a batch. So you'll see there at the end it's saying it's running it as a batch. If I come on and process something as a batch just for a minute, and clock onto that and just minimize there. So when I come to the time clock admin area will give me people who haven't clocked off and things that haven't been posted. So if someone hasn't clocked off, it would let me actually come through and you'll see these ones haven't now clocked off, but I can actually say I want to clock these people off because they forgot to clock off for the day, and I can update their timesheets. It will bring through, and if I've had any batch transactions which haven't been processed, I can bring this through now and I click on the ones I want to process, or I can delete them, or I can actually come in here and I can edit these and make changes on the fly while I'm going through, and then I can update my time card. So if I update that, post them all, it'll now process through into the system. So if I went back into the main Triumph system, you'd see that posted through. One other thing that's just worth noting when we're doing time clock entry, I'll pull up my time clock entry again and have a look at job, pick up a person. Something that will happen, if I pick up a job that actually has been quoted, you'll see there's an ability and an option in the system to actually bring through the standard cost centers and activities that are within a quote, so you can actually pick up things that have already been quoted. So it's a lot easier to code against them. The other thing that's worth noting is there is actually part of the training notes I've included a procedure for the time clocking module, which is worth reading in its own right. Okay, I've just logged in here to Triumph site, which is B2B. This is a Triumph demonstration site, which is b2b.triumph.com.au, and you'll see there's a few different options that we can log into. What I was going to do is, because we're doing job costing, I'm just going to go to timesheets, come up, and you'll need to put in who you are as a person. So I'm just going to log in as a person here, sample person. Log in, I have no password, and it'll just bring up my timesheets. Very simple process to record my timesheets. I could come in, record the job that I'm working on. What job is it? what cost centre, what activity, and what's different to your normal sort of processes. You can actually then record the days, the hours you did on each day, and pick a different job. Cost centre, the activity again. And you'll see the system actually records an ongoing total down the bottom once we've finished the line. So you'll see those, and I can see that I've actually got the right amount of time, or I've missed a certain amount for this day. So I can fill that in and get the balance of it, and that'll give me, I've now got my full 40 hours broken down into those, and then I can log off, carry on and process that, or I can move on to next week's timesheets. That's as simple as doing timesheets on the web. I'll leave you to have a practice with that.